James, my friend. We are live. We're live everywhere. Let's do it. I've just got to remember to press mute on the YouTube, otherwise I get this horrible feedback. Yes, there we go. Right, we're live. Let's do it. So if you're looking to swing trade the markets, you're in the right place. We've got some exciting developments as always. But nonetheless, let's do it. I'm quite drawn to I'm gagging on it already because I'm rolling my eyes at myself about this. I'm kind of drawn to a few quotes, so I'm going to throw a few at you, but the one that's really sticks in my mind is this one that's on this main slide. I've used it for quite a while, from Einstein. Everything must be made as simple as possible, if not simpler. I am a true advocate for simplicity. If it's complex, I think something's gone wrong. So I am an advocate for that. I've got one or two more, which will explain my train of thought this week. But nonetheless, if you are looking to profit from daily, weekly, monthly swings in the markets, then you're in the right place. If you're looking for underwater basket weaving or something else, then perhaps you've clicked on the wrong button. You might just want to hit the backspace. I want to, as I've already alluded to, I want to make trading simple, and of course it should work. I add that last part because the trading methods that I tried many years ago before I kind of figured out my own approach, they didn't appear to work. And one of the reasons being, it was not necessarily that the strategy didn't work. It didn't work for me. And I think there's a big difference between a strategy that works and having it work. So one of the things that I've striven to do all through my career, not just for myself, but also because I've taken on this commitment to help other traders see some measure of success, is it's got to be replicatable. Like, I know what I'm doing. I don't need to do this. I love doing it, but I don't need to do it. Test. Duncan, I just stepped away from the mic, but it should be working fine now. But one of the things that I wanted to do was to try and make it replicatable. So that's what I mean by and work. It's got to work for you. It works for me. Of course it works for me. But if it can't work for you, then what's the point of me doing this? So I've gone down this road of rule-based trading. It needs to be methodical. It needs to be replicatable. And we want to remove the discretion. And as always, selfishly, I want it for me first. I hate the thinking. I hate the second guessing. I hate the wondering if I'm doing the right thing. And as a part of that, it means that you get to benefit from that replicator, the replication, the replicatability in the trading approach. And eventually we get to this cool statement. So my role is that I want to provide the tools, the rules, software to assist you, this community that we're building here to support you. And if you'll allow me to be that, a mentor to show you the right way so that you can get results. Again, as I've already mentioned, I don't need to do this. I love doing it. I love helping people along their journey. But if I can't get you to replicate what I'm doing, then there's no point in me doing it. So that's where I'm at today. And the good news is it is replicatable. And it can be as simple as defining what you're doing in even more detail. A lot of people would, for example, buy the dip. And you hear it all the time. And the reality is they don't know what they don't know. They don't know that the dip is not the dip. So what we want to do always, every opportunity, is try and put more definition on what we're doing. So I want to buy the dip in the context of the trend. So we're going to define what the trend is and then define what a dip is. And we've got rules to approach this. And then we can flip those rules over and sell the rally in a downtrend because we're in a bear market. Is there still a little bit of echo, Duncan? I can see your comment there. How's it now? So that's what we're trying to achieve. Again, perfect. So that's what we're trying to achieve. That's what I'm trying to achieve for myself first. Again, I'm railing against the sitting at the computer like a mindless zombie. And we've all done it. I've spent too many years and too many hours looking at chart after chart after chart like a mindless zombie, asking myself one question: where's the trade? And as soon as I stopped asking this question, my trading improved. And I started to look for statements. There's the trade. I don't want to ever be in a situation where I'm questioning, is this a trade? Can I do it? Is it this pattern, the Dow through, the GAN through, the Elliott wave? Is it a wedge? Is it pen? I mean, I spent 12 years trading essentially breakouts and variations of it. I never want to ask myself, where's the trade? Is this valid? Is this the right thing? Because that creates the high blood pressure, the anxiety, the sweaty palms, the sleepless nights, and all the other bullshit that comes along with trading under the guise of trading. But when you start making statements, you start sleeping well at night, you start making regular profits, you start having great successes because you've got the confidence in a proven process that pulls profits predictably. Any more peas we can squeeze in there? This is what we get. I refer to what I do as production line trading, and I am, constantly under the hood trying to create this, what is now a strategy family. We've got the core process, which is pretty much what we talk about here on these open sessions every Friday, the swing trading stocks, the classic trend trading. I refer to this as getting paid at the end of the month or the end of the quarter, because that's the average payout cycle. It's back tested, forward tested, sideways tested, upside down tested, real money traded. It works. And the point is also it's replicatable. We've also got a short-term version of this. The idea is to get paid at the end of the week, or 7 to 10 days, using 60-minute charts, essentially. The latest addition to the family is the one trade a day S&P strategy, and we're looking to capture the main move of the day. So there starts to become a theme with what I'm doing. I'm looking to capture the main move of the day, the main move of the week, the main move of the month, the main move of the quarter, and it needs to be low maintenance. So that's what I'm trying to do. And again, there's a day trade version of this. I've got to admit, I trade this infrequently because the trade-off with this version of the strategy is the trade-off is a little bit of extra time. I'm going to have to spend 1 to 2 hours at the desk. And to be fair, I don't really want to do that every day. But the way I've designed this is you'll know today if there's a trade tomorrow, so you can jigger your schedule around if you choose to. On that note, the S&P strategy, it's not time intensive. It's basically check in, check outs, and take your profit at the end of the day. So it's low maintenance compared to the day trade strategy. Anyway, we've got consolidations. Again, this is what I spent 12 years doing, trading ranges and trading breakouts. And again, we've got systems and scans, all to trade the markets in the best possible way. Basically, any market condition is the point I'm trying to get to. It's all back tested. Again, I'll show you these reports on a regular basis. I was also investigating a variation of the strategy to trade oil. So we've got oil futures, oil swing trades, and I can't believe I hadn't run my systems and processes and algos essentially through oil. So we've got an oil strategy and a currency strategy as well since we last spoke. So it seems to be multi-asset tradable, which is the great news. A quick announcement and then we'll hit the charts. If you've not already seen it, I have a brand spanking new solo podcast. Let me just pop it into the chat box. If you could do me a favor, should you want to listen to me during the week, I am on the usual Apple and Spotify. Links are in the chat box if you'd like to subscribe and follow there, or you can just search AntiVestor in your favorite podcast player and click the follow button. I'll be doing it weekly or sometimes twice weekly, just while I'm getting into the routine. But if you'd like to follow me there, that's great. A new feature for these Friday open sessions, we're going to try and turn it into a Zoom party. If you'd like to hop on and share your view of the markets, or if you've got a question, or you just want to share a learning point, a teaching point, and again, just try and make this more of a community feel, then please feel free to just send me a message. Again, I'll be doing this via Zoom. If you're watching this on the YouTube, it's unavoidably not possible. So come and join us on the Zoom group. Just let me know that you'd like to have a little chat and just share something with everyone. And if you want me to, I can also include that in the podcast. I'll just snip that bit out and maybe we can feature you as a temporary guest on the podcast. Right, so before we get into it, for those that are new, I do see 1 or 2 new names. Hello, if you are new this week. But before we get into the charts, my name is Phil Newton. I've been doing this for almost 30 years. I'm just a regular guy. I am most certainly not a Wall Street guru. you should I've got to say this, I'm not a Wall Street guru. I've not worked in the streets. I'm not financially qualified in that regard from a legal point of view. You should most definitely not listen to me or anything that I say as financial advice. It is my opinion and mine alone. However, what I will be demonstrating to you is that history does dance to the same tune as what we're looking at right now. I am a firm believer that history repeats itself, and I've proven that time and time again for myself. And obviously, the money speaks more than me. So again, I just like to noodle around. I like to go for long walks, read books, drink coffee, chase flamingos. We've all got some quirky nonsense about themselves. Unfortunately, I seem to have this weird obsession with flamingos, but nonetheless, that's just my little quirky nonsense. From a strategy point of view, from the charts, I get results. Again, I post what I'm doing on a regular basis. And again, some of the results that we've seen recently, I've been focusing a lot on this one trade a day. We've had some great results. So there's the one trade I've had this week actually is, you can see the broker statement right there. Just, I'm not pulling your chain. But we get some results from the latest version of the strategy. And there's a few losses in there as well. They don't always work out, but it's on average results. If you would like to work more closely with me, you can do. This is as close as you get to a hard sale. It's an invitation. If you want to, you can. And if you don't want to, that's cool as well. Well, I appreciate that what I do isn't right for everyone. But just keep in mind, if you make no changes, then nothing will change. And if you want to get results like I've helped thousands of, well, quite literally thousands of students over the years get their own measure of success, and you want to be a part of that family, then you are invited to work with me. All you need to do is just send me a message. Let's start the conversation. And if it is right for you, we can have a longer conversation. And if it's not, I will always point you off in the right direction. Usual format, if you are new, is we're going to have a little bit of a chat. So be pleased to know that the slides part of the show is almost over. I've spent the 2 minutes introducing myself. We're going to spend about 60 minutes together nerding out over the charts. We're going to look at the markets, the sentiment of the market, which is a new feature. And we're going to look for some, we're going to untie my tongue, and then we're going to look for setups. And as mentioned, if you'd like to chat, just let me know. Just pop a comment or raise your hand using that little feature button. And I will toggle the mic off and we can have a little chat about the markets. So before we do hit the charts, I just want to chase a quick squirrel. And one of the things that I've been thinking about recently is philosophy. I've been asked strangely about all sorts of philosophical things. And the one thing that seems to be consistent is I've always taken the Socratic approach to my learning, my development, my thinking. And I've just found a few quotes, again, nothing really revolutionary here. I'm sure you've all heard these, but falling down isn't failure. The most successful people have failed 1,000 times. And Thomas Edison's always quoted as he failed 10,000 times before he invented the light bulb. He was an avid inventor. So if you're seeing some lack of success, it doesn't mean that the success is not around the corner. I mean, I certainly had my own failures when it came to trading. I failed more times than I care to mention. But it's what can we learn from those lessons? That's what we want to try and achieve. So this is what we come back to change. If you consistently do the same thing over and over and over again, then nothing will change, nothing will evolve, nothing will develop. So it's better to change an opinion than to persist in a wrong one. And again, that really struck a chord with me because that's something or variation of something that I've said for many, many, many years. So in a trading context, I like to ask myself questions, which is what I consider the Socratic approach. Ask a question, pose thoughts. And basically what I'm trying to do, and this is what Socrates was trying to achieve, he could not teach someone anything. The only thing that he strove to do was to give them the ability to think. And most people don't think, but we need to ask ourselves questions to be able to think. And some of my community insiders will recognize these questions. I just thought I'd share them this week. But this is my guiding light, my lighthouse essentially on a daily and a weekly basis. What stocks am I looking at? What stocks have I managed? The most important question for me here is, did I do everything that I said I was going to do? If 5 trades set up this week as per the system rules, did I take 5 trades this week? And if not, why not? If I've genuinely missed it because I was away from the desk, that's the only legitimate reason. Life prevented me from placing that trade. So I've got to ask myself, why didn't I place that trade? Was I scared? Did I talk myself out of it? Did I delay the trade? All sorts of reasons here. And related is, am I in all my potential? Again, if there's 25 trades to place, am I in 25 trades? And if not, why not? The ongoing questions are, what research have I done? I'm going to share some of that here today. And are there any lessons to be learned? Any ahas, any epiphanies? The eureka moments, while we're on the Greek theme. But we have this ability to ask ourselves 5 simple questions that just makes the journey of what we're doing, what we're trying to achieve, the trading experience, it just guides the thinking process to come to a natural conclusion, especially if we're not placing the trades that we're supposed to place. We get to follow up that question with why not? Why didn't I place that trade? Is there a legitimate reason? Did you talk yourself out of it? Okay, now you can investigate. If I talked yourself out of it, why did you talk yourself out of it? Is it, I was scared of the outcome? Okay, if you're scared of the outcome, then your position size is too big. And it's a secret spoiler alert, the position size being too big is probably the answer to most things. That's the thing that I've discovered. You reduce your position size to a sensible level, and a lot of the realities that we're trying to avoid with the negative experiences of trading, they start to be diminished. Again, they're never going to go away, but they do get diminished. So these are the questions that I ask myself. Again, I thought I'd share them this week. This is what I refer to as the Socratic approach. I try and do this in life as well as trading. I like to ask myself questions, usually around my sanity. But I suppose if you stop asking if you're sane, then it's too late to do anything about it. But nonetheless, let's go and hit the charts. So if you find that valuable, I trust you find it valuable, but these are things that I've done to try and improve my own trading. So with that said, let's hit the charts and let's find some opportunities. There's a little bit of a different look to the charts today. Is everyone okay with bar charts? I was asked a question, what color should the bars or the charts be? And this is my flippant response. It doesn't matter. So if you want to see the candles, if you want to see the pretty pictures, let me know. But otherwise, I'm going to leave it on the bar charts for the moment. I have remembered to put the watermark in the background so you can see what we're looking at this week. So let's think about the strategy. What I'm trying to do is basically trade the trend. And as I mentioned, the top of the session, I'm trying to buy the dips and sell the rallies. So let me go through a bullish example first and foremost. Let me just scroll back. Let's get my drawing widget on the roll. So the first thing that I'm looking at, first, let's think about the setup. I've got the 200 period moving average. I've got the 50. I've also got the 20 period moving average. There is nothing magical about these indicators. It just allows me a mechanical approach to evaluate what price is doing in relation to the tools that I prefer. Again, the tools themselves don't matter. If we were talking about this 5 years ago, we would have been doing exactly the same thing, but in relation to the Bollinger Band. Anyway, what I'm looking for first and foremost is the 50 to be above the 20, the crossover. The textbooks refer to this as the golden cross. I don't know why they called it that. It's bullshit as far as I'm concerned. But all I'm looking for is for the 50 period to be above the 200. At that point, I will define the phase of movement as bullish, and I'll be looking to buy dips in what I'm now considering to be an uptrend. I'm also going to wait a short period of time, around about 20 days, to make sure that I'm avoiding false starts in what could be at the early stage of new trends. Because again, we're obviously looking at this with hindsight in real time. I'm just going to try and avoid some false starts. Hopefully by then we should see price pushing up. So when price comes back to, let's just focus on 2 lines for simplicity. So the 50 and the 200 is there. So when price comes back to the 50, I'm going to call that a buyable dip. When it pushes away, I'm going to call it a dip worth buying. And I want to try and profit from that dip worth buying as it rallies back above all of the moving averages. So when price is above all of the moving averages, that's my profit opportunity. When it dips back below or to the 50 period moving average, these are dips worth buying. So they're all dips worth buying, and the pushes away are the profitable opportunities. Can everyone see that we should be making money when the markets are trending? Very simple. Is everyone happy with that? Very simple process. Buy the dip in the context of a trend. There's 4 rules to this. The moving averages, wait 20 days, and then look for dips in the context of a trend. We've got a buyable dip in the context of a trend, and the profit opportunity is when price pushes away. That's what makes it a dip worth buying. Everyone happy? We're all on the same page? I think I'm just casting my eyes down the list of people. I think everyone's familiar with this. Very clear. Thank you very much, Zeke. I think everyone's familiar with this. So It's not a revolutionary concept. It's been around since the ages. There's obviously a few more rules to consider with the entries, the exits, the stops, the targets. Again, for time restraints, obviously on these open sessions, I don't have time to go through the specifics, but for most people, this is enough to make money. It certainly was enough for me. So the opposite we also have, let's get onto the live part of the chart. The opposite is also true. We can sell rallies in a downtrend. So there's the 200, there's the 50. So when price comes back to either the 20 or the 50, goes back to, comes back there. So we've got this rally worth selling. So the algo will actually pick this up. It marks it off on the charts. So we've got a few opportunities where it comes to the 20. We can see that there's some profit potential, some small trades there. And right now we've got a whopper. Initially short or round it, what is it? So 38, sorry, my apologies, my can't read, 39.81. So short at 39.81, and we're currently a couple of hundred points lower from the initial entry. So the algo will fire these things off. So sellable rally in a downtrend, sell the rally in a downtrend, and then we've got a rally worth selling as it pushes below all three moving averages. Now it's not really the right time to consider selling the rally because there's no rally to sell. So this is the profit opportunity, and right now price is pushing ever lower. So again, buy the dips, sell the rallies. It's a very simple concept. And just to demonstrate that it works. Okay, Phil, I get what you're saying. Buy the dip. We hear you. I like to wave my magic wand and say, if we just did this, if we didn't think about anything else, we didn't look at the Fed, who's tweeting, what Elon ate for breakfast. We did nothing but just buy the dip and sell the rallies with no opinion, not worrying about what the announcements are. We're not looking at inflation. We're not looking at the Fed nonsense. We're not waiting for reports. If we just did it when it said to do it, at the click of a button, we can say, here's what we would have won. This is the average expectation of what we could have and what we should take away from this. Again, forget the dollar amounts. I'm not really looking at the specifics. The first thing that I'm looking for is, do we have a steady equity curve? This is with non-compounded over the last 20 years. So since the late 90s, early noughties, if I just bought the dips and sold the rallies in the way that I've just described, sprinkle some money management in there, then we've got a what's known as, in fancy terms, a positive expectancy strategy. Great. So this works on the markets, the market being the S&P 500. So if it works on the market, this is the benchmark. So what I can do now is I can look through individual stocks and say, is this a better performer than the de facto market? This is the benchmark. This is what I'm trying to beat. So I'm looking for opportunities. I'm looking for stocks, ETFs, currencies, oil, futures, anything. I'm agnostic. Again, mostly I trade stocks and stock options, just because I want to trade with a stock option usually. So if the instrument has options, I'm probably looking at it, and I'm always trying to improve the process for better opportunities. But this is the benchmark. So at the very least, I'm going to trade the S&P 500 at the very least. Then I'm going to trade a group of stocks that are either at least as good as this or better, because maybe there's individual stocks that outperform the benchmark. And that's what basically creates my top 25. These are all stocks that are at least equal to or better than the markets. So I'm going to include what I consider to be the best of the best of the best. I've been through every stock that has options. It's got liquidity, means that we've got good prices. And I'm looking to try and beat, or to be fair, I'm looking to beat the markets on a consistent basis. So the last part of this is to trade with the frequency that the strategy sets up. The frequency that the strategy sets up. I don't know which trade's going to work. I'm not going to blow wind in anyone's sail to say I'm any smarter than anyone else here. You're all probably smarter than me. I'm just a poor farm boy who figured a few things out. What I want to do is have consistency in the application of a strategy. All we're trying to do, comparing this to the real world of business, is we're opening the shop from 9 to 5, Monday to Friday, half days on Saturday. We've got stock on the shelves. We've got staff on the tills, because that's how you run a business. So what I'm doing is the equivalent. I've got stock on the shelves. I'm turning up for my I've got stock on the shelves and staff on the tills. And that's what I'm trying to do. I'm going to place the setups with the frequency that they set up. One of those, at some point through the year, is going to be the elusive 10-bagger, the swing for the fence trade, the, oh my God, it's gone to the moon, opportunity. I don't know which one it's going to be. I've got to trade them all. So you'll always be on, theoretically, you'll always be on the 10-bagger. My favorite one was the LNG. My favorite 10-bagger this year was, this one. Had some, great opportunities where you've got, price moving from, 130, 170. In fact, I think I picked the wrong one now I've said it. But generally in the energy sector this year and last year, or the end of last year and the first half of this year, it's been pretty good, the energy sector. Anyway, the point is, I don't know that you're going to get the big one. I just know that if you place the trades with the frequency that they set up, then you'll be on the big one. RCL is, again, has provided some great trades to the downside on the bear side. I took this as 2 trades just because I saw this as a breakout, range reversal and a breakout. So the algo fired this off as one huge trade. So I took this as 2 trades, but the algo picked this up as the elusive 10-bagger. You got a huge straight line movement. And to be fair, as I'm looking, it looks like we might be getting a new setup on RCL. Again, if you want to layer on some discretion, we've got a bear flag that potentially could enhance the flavor of the trade. So what I might do with this is, because I see an extra piece of information that's not necessarily mission critical, I'm going to place the trade anyway when price goes below the 50-period moving average. I'll be selling short or buying puts in my case. But maybe I can increase position size on RCL because I've got this extra pattern. So I'm never going to lead with discretion, but I can layer it on afterwards if I want to. But anyway, the point is I got off the beaten track a little bit. So I'm going to trade with the frequency that the trades set up. The chart is intentionally, wrong one. The chart is intentionally blank. Right, so I'm going to focus my attention on those 25 stocks, top 25. They're going to trade the setups with the frequency that they set up, because I don't know if the next one will be the one. So rather than worry about the next one being the one, why don't I just take the trades with the frequency that they set up? And if it happens to be the one, then I'll be on it. And if it's not, if it's just a regular everyday movement, I can take a few dollars here, a few dollars there, a few dollars here, lose a few dollars. Again, there's going to be losses. Lose a few dollars, maybe lose a few dollars, maybe sit through a retracement, because that was what happened last month. Sit through a retracement that was frustrating as hell. And now everything's coming back in sync, and now we're back onto the profit part of the strategy. So there's going to be good times, there's going to be mixed times, there's going to be great times. I don't know when they're going to happen. So we trade with the frequency that they set up. So the last part, if you've not already gathered, is consistency. Consistency of application on the strategy, and at least one, but in this case, a portfolio of opportunities that allows me to profit on a regular daily, weekly, and monthly basis. And that, my friends, is it. Congratulations, mic drop. If I was to drop dead tomorrow, you've got everything that you need to make this work. Take a screenshot of the stocks. These are my best ones, and you've got everything that you need to make it work. So what I can do is what we're seeing, actually, if I just rank and sort. So focusing my attention on the left-hand side here, I can sort out which stocks are in a bullish phase and which stocks are in a bearish phase. So these are all bullish, meaning that the average price has crossed up and I'm looking to buy the dips. But I can see that price is predominantly below all 3 moving averages. So we might be going into all of the top 25 might be moving into completely bearish territory. Again, just waiting for the average price to cross over. But we are going to see, so these next 3 here, this tells me where's price in relation to the averages. It's below all 3 moving averages. So the bearish side of the ledger, bearish trade, there was at least 20 days in trend. Price is below the 200, which is where we want it for a bearish trade, below the 50 in some cases, and below the 20 also in some cases. So I can rank and sort which stocks are in a sellable rally in this case. So that's what this actually means. So we've got RCL. So here we go. So I should be in quality control. Am I in all my potential? Well, price is below all 3 moving averages, the profit part of the move that we described earlier, and we're in a bearish trend. So I should have a trade on all of these. Guess what? I've got a trade in all of them. Well, there's 1 or 2 exceptions in fairness. which is if we've got a consolidation. But I'm in everything I'm supposed to be. Great. Quality control has been assessed. So the three that I only need to keep an eye on are these. RCL, we've just looked at it. So price is rallying in a downtrend. Let's take a look at it. We've already looked at it, but there we go. So I've got it prepped and ready because I was looking at this. So we've got this lovely rally in a downtrend. There's the 50-period moving out. And to be fair, it looks like we're going to be gapping down $2. This is going to fire off today. So as it goes through the 50-period moving average, I think I'm going to be selling shorts. I've got a little bit of a price action entry, which I was going to look at refining my entry. And with this gap today, I'm probably just going to go live on it. So I've got a little bit of extra information, which is influencing my entry. I don't need to add that. It's just because I've got 30 years of chart reading experience, I can bring something extra to the table that the algo can't quite figure out. So I can refine my entry choice because I get that luxury, but the algo is going to fire a trade off. I'm going to place the trade anyway. And all I'm really doing is haggling over where's the entry because I've seen something extra on the market on the chart. So we've got a sellable rally in the context of a downtrend. Market's just opened. We're below the 50. It's probably going to be firing off at some point later today. But ultimately, we've got a trade opportunity. Sell the rally in a downtrend. And again, we can focus our attention very quickly, very simply, very efficiently on three stocks. Again, I've got the others. They're not bullish on those. They're not working out the way that I would want. Again, I'm not going to lie to you. They're underperforming. I'm now looking to see if I can manage them effectively if there's a rally in the markets. That's my objective with the bullish trades. The bearish trades are profiting. Last month, it was the other way around. The bearish trades were underperforming and the bullish trades were working. So we have this swing and ebb and flow in the market, which works to our advantage. And there's three candidates, which look great. RCL, Starbucks, and Win that are rallying in the context of a downtrend, and RCL looks like it's about to go live today. Let's check out the other three. S-Books, Starbucks. Looking forward to shorting the shit out of this because the coffee is crap. Same pattern. Now we're looking at, we've got this rally in a downtrend, this huge trend rally, slight rising channel. If you're familiar with the pattern, we can call this a bear flag. The algo technically is already live. I've got a cheeky little entry route down there that was underperforming, but I've got a brand new entry right here. So as this sets up, we can see potentially a push down to at least the recent lows. So what's that? We've got, $15, $20 potential on Starbucks. So if price goes below about, exactly $83.90, that's what the algo is saying, then I can take my entry there. There we go. So that's just what I'm waiting to unfold. So we've got two trade choices, RCL. We've got Starbucks. Doesn't look like it's going to be today. I'm not going to worry about it. And the last one that I could have some action on is Win Resorts. Now, in fairness, I'm already in this. You can see my entry right there. So I've taken the trade on. Now, this is one of the things with using stock options compared to trading stock. The algo technically has been stopped out. But because I've got plenty of time with my stock option, I've got enough time to be right. It's meandered sideways. Again, the algo technically has been stopped out. It uses stock to work out all the numbers, but I'm using a stock option. So I'm short, bought puts. I've not been stopped out because I don't need to be. I'm using the full price, the premium on the option as a built-in stop loss. So it could rally to the moon. But as long as it comes back down, then I've got the chance to manage it more effectively. Now, in fairness, it's meandered sideways. So as long as I've got enough time to be right, which I have, then as long as my viewpoint, my opinion comes good, then I've still got the chance of a profit, which is probably what's going to happen with Win Resorts. So three choices and three candidates for you to follow. So if you want to follow along, you can do. If you want to see if they work out, you can do. But again, I've got to trade the setups with the frequency they set up. And the last part of the case didn't make sense. It means that because just by moving from stock to stock options, I'm often outperforming the algo because I'm not being stopped out with the same frequency. So I'm minimizing the losses just by smartly adjusting the way that I place the trade. And I'll never have to worry about being stopped out ever again. So that's it. So there we go. So we've got a couple of candidates which look great. Let's check out actually that was top 50. Let's check out the top 25. My apologies. I was looking at the wrong segments. I trade quite a few things. I've got about 100 stocks that I look at. Okay, Glenn, thanks very much. I'll speak to you tomorrow. So this is my apologies. That segment was my next 25. So the first 25 that I look at is here. Let's do the same thing. Let's see if there's anything that we're in. Again, top 25 right there. So we've got the bullish and bearish trades. So we separate. So these are all the bullish trades. These are all the bearish trades. So we can see if there are any buyable dips or sellable rallies. So on the bear side, we've got one sellable rally. Can everyone see that? Sellable rally. Without looking at the chart, again, let's just put the chart blank. I don't need to look at the chart yet. Bearish, the average price crossed over. We're below the 200, but we're above the 50 and the 20. That's a rally in a downtrend. That's what I'm expecting to see. So there's only one thing that could be brand new for me to do. So let's just put a break there. I should have bearish trades on all of these. Why? Because they're below the 20, below the 50, below the 200. The average price has crossed down. There should be bearish trades on all of these. Guess what I'm short on all of these? Again, there's one or two exceptions because, again, if price is in the middle of a consolidation, I don't trade. And to be fair, this is a good example because I've already looked at the chart of what I wouldn't trade. So ALL, all states, again, price is meandering and dithering with the moving averages. So there's the 200, there's the 50, there's the 20. So they're all squished together and we've got multiple crosses in the average price. So when I've got multiple crosses in the average price, I'm going to call it consolidation. I'm going to draw a big box around the whole thing. I'm going to call it consolidation. I'm going to wait for a breakout or a reversal off the range. I've got four choices. So this opens up the other four money-making patterns that I have. Buy the dip, sell a rally. I can buy range lows, sell range highs, buy the break of range highs, or the break of range lows. So there's four patterns for me to trade it. So where's price in the middle of this range? Or so where's price in the relation to this range? It's in the middle. So to buy range lows, it needs to be down here. To sell range highs, it needs to be up here. To buy the breakouts, it needs to be above the range. To sell the breakouts, it needs to be below the range. So right now, this is not the best location. So I'm going to leave it alone and I'm not going to worry about it. However, the algo was saying maybe there's a sellable rally. So this is why we always have this visual inspection. Where's price in relation to the range? Well, I'm expecting to see a trend. Actually, price isn't trending. Let's not worry about it. So let's not worry about it. So I'm going to leave that alone. And this is what I meant by there's a few exceptions. This is the exception to trading the trend. If price is not trending, you can't trade the trend. Everyone happy with that last comment? If price is not trending, you can't trade the trend. Simple concept. Right, while we're on that, let's draw a little visual. Oops, I've done it again. Oops, I did it again. Right, chart area is intentionally blank. So there's 6 patterns that I like to trade. We've gone through the first few. Buy the dip, BTF, oops, D. Buy the dip, the opposite is sell the rallies. Sell the rally, STR. Does anyone say that? And then the next 4 are consolidations. So we've got, as we've already mentioned, so price is ranging. So I can change colors. So I can buy range lows, or I can sell the break of range lows. I can, buy range lows, sell the break of range lows. I can sell range highs or buy the break of range highs. So they're the 2 things that the 4 things that I can do. So there's 6 patterns that I can trade. Again, you've got number 1, number 2, and then the other 4 are inside or on the breaks of consolidations. So there's only 6 things that we can actually do. There's actually 2 more, 7 and 8, and that's counter trend trading. So counter trend would be to buy sell-offs or sell the rallies. Again, I don't like counter trend trading. I would rather go with the money flow. It's a valid way of trading, but even as an experienced trader, I find it not necessarily difficult to do. It just doesn't sit well with my personality. So I'm not going to worry about it in the slightest. We have plenty of opportunities. So I think 6 money-making patterns is more than enough to make a career on. In fact, it was. While I'm nerding out over this, I spent 12 years just trading breakouts. That's it. 12 years just doing that. Breakouts. Occasionally, I would trade the reversals, but 12 years just trading breakouts. You just need one pattern to work. That's all you need. Most of the time these days, and again, for reference, most of the time these days, I'm trend trading. There's a lot of money to be had trading trends. So most of the time I'm buying dips or selling rallies. Most of the time, that's what I'm doing. Cool. Right. So with that said, the markets have been open just a few minutes. It looks like we're falling out of bed. Let's just check out the markets. There's a little bit of news about an hour ago, and it looks like we're about to pop the lows. So we've got this little cluster of price here. We're still in that cluster, but I think if we break and get below 3,600, we could be on for Black Friday, folks. Again, it wouldn't surprise me if quite literally the arse fell out the markets if we went below 3,600. No particular reason. It's an opinion. I'll find out if it's going to happen. I'm already well positioned for the bear move. My opinion, looking at market breadth, and this is a new introduction to the evaluation. This tool down here, this is actually another chart. I've just overlaid them onto each other. And one of the things that I like to look at is the number of stocks that are past their 20-period moving average. So the number of stocks on the S&P 500 that are past either above or below the 20-period moving average. And one of the things that we've certainly observed as from a sentiment point of view is when price is at these extremes, then usually interesting things happen. Usually a direction shift, and it could be just 3 or 4 days. It could be 3 or 4 weeks. I don't know how long it's going to last. I'm just anticipating a bullish movement. So while we are selling off, I am prepared for the rally, but there's been no indication on the lower time frames to suggest yet that I should be buying the rally up. I don't need to worry about it yet. So for the moment, until something new develops, the same thing's going to continue. So the trend is down, firmly down, but I am anticipating the possibility of a bullish move. Now, all bets are going to be off if we don't rally in the next few days. It looks like, again, 3,600 goes, then we could be looking at a monumental sell-off. So again, this is just observational. It's a sentiment indication. It's not hard and fast. So it's just giving me a clue as to the possibility of something happening. And what I can do is I can use this to tidy up the portfolio, manage myself, get positioned, and be prepared for the possibility of a rally over the next few days. And usually, and what historically over the last 2 or 3 years this has done, it's usually given a lead indication of about 2 or 3 days, maybe 2 or 3, maybe 4 days leading indication to say maybe there's going to be a shift in sentiment or a shift in the direction, at least temporarily. From our point of view, the trend is down. This could be the rally in a downtrend that leads to the next leg of the movement. Again, we'll find out next week, next month, whether it came to fruition, but we can prepare in anticipation of that possibility. Now, notice that I'm not saying it's an automatic take action tool. It's not an automatic take action indication. Again, listen to the words I'm saying. It's allowing me to prepare for the possibility of a rally. I can tidy my portfolio. If I'm close to profits, take some profits. If there's some bullish setups that look close, I can prepare them and keep an eye on them. So that's essentially what I'm doing. So let's think about the lower time frame. So I'm just going to drop down to the 60-minute chart. So on the 60-minute chart, this is what I've done. So I'm preparing for the possibility of a rally. So based on that sentiment shift, we can see the 60-minute chart. This is the 60-minute S&P 500. Sorry, there's no watermark on this chart. S&P 500, the same chart that we just looked at on the 60 minutes. Oops. We can see that price is up a day, down a day, up a day, down a day. It's in a consolidation. I've seen this as a almost expanding volatility pattern, this rising highs and descending lows. But essentially at its core, it's a form of consolidation. 1, 2, 3, 4 crosses in the average price. I've got to call it consolidation. I don't really care what name it is. We're not disputing that it is in a consolidation. We can call it a different thing if we want to. Let me just tidy this up and move a few lines out of the way. I've got some of the previous trades marked off. These are just being parked out the way. They're not for anything for the moment. So one of the things that I'm preparing for, so let's think about this. So if we've got this bullish sentiment, possible bullish sentiment shift, I can use the same process that we use on the daily charts. Use the 200-period moving average as an over-under. Price right now is still below the 200-period moving average, so I'm not inclined to be bullish yet. I know that price is in a consolidation. At the very least, I'm going to draw a big box around the whole area and say it's in a consolidation. No one's in dispute. No one's disputing that. So what we can see straight away, if I just draw a big box and the 200 period moving average is at the high of that big box before you even decide to try and label it, then it looks like I can start thinking about more adventurous bullish trades above 37.50. On the assumption that that happens, I can start applying my short-term trend models to the lower timeframes, because I'm expecting a sentiment shift to the bullish side, and this might allow me to get a nice, to be fair, aggressive, what might be technically counter trend on the daily, but with the trend on the 60-minute chart. And I can prepare for that possibility. It's not there yet. There's no action for me to take. I'm not going to get excited and fire off bullish trades. Until something new happens, the same thing's going to continue. So what is happening right now is price is statements in a consolidation. Something new would be a breakout. It's not happened yet. Let me just pause there for dramatic effect. Is everyone happy with this? Does this make sense? All I'm trying to do is look at the charts through 6 money-making patterns. Is it trending? Is it ranging? If it's trending, sell the rallies, buy the dips. If it's ranging, range reversals and breakouts. I'm expecting a rally based on a sentiment shift. Great. How does that sentiment shift fall into the 6 money-making patterns? We've got a range. Cool, range. If I'm thinking about a bullish sentiment shift, then I can use the breakouts to participate in that. That's it. 6 money-making patterns. Any questions on this, folks? Any questions on this? Does this make sense? Going to get rid of that lower line there. I think I prefer that as my range high there. I'm just playing around now while I'm waiting for people to type out questions. We've got multiple touches of the lows here. So I'm going to call that a horizontal consolidation. I wasn't really happy with that lower trend line. Wherever possible, I'll try not to draw trend lines. So in fact, now I'm doing this. Let's call it a consolidation. Let's take my own advice. Let's just draw a big box around the whole thing. Bam, there we go. It is a consolidation, and let's not worry about what the damn thing's called. Absolutely, yeah. I mean, what you caught me doing, I was kind of playing around with trend lines. I was trying to call it an expanding something or another. To be fair, you caught me falling into my own trap, which is trying to label it. You know what? Let's just press the easy button. We're not disputing it's in a consolidation as per the definition. We've got multiple crosses, 1, 2, 3, 4, and a relatively short space of time with no vertical separation. Let's call it a consolidation. Cool. I'm not disputing that. Okay, bro, all we were doing was haggling over where it is. Let's not worry about that. Let's just say it isn't a range statement. Draw a big box around the whole thing. Let's not worry about the specifics. So if we get above 37.50, breakout, baby. If it goes below the lows, I think we're going to see the arse fall out the markets. Until that happens, I can, in line with the trend, sell the range highs because we're in the trend. The trend is down, short-term consolidation. And I can buy the breakouts if there's going to be a sentiment shift. To be fair, I would already calling this a range over here. So we've already been selling the range highs multiple times here, targeting the range lows. So it is possible you can still trade the range. And the algo is firing off anyway, just sensibly adjusting some targets just based on the consolidation. So that's looking good to me. I'm liking that. So press the easy button. Let's do let's call it a range, and let's not worry about what the name of it is. Looking good, folks, looking good. So we've got the trend algo on, wrong one. But the trend algo on the lower time frames. So AMD is still pushing. I've got a target down at $60. It's Friday, end of the month. If I'm $1 away at the end of the day, I'll probably close it. Okay. I'm looking for $60. We're at 64 now. So if we get $1 or $2 move down, probably going to close it. Apple's finally fallen out the apple tree, but boom. Google's got a bit to go, got $7 down move, so I'll probably hold by over the weekend. Amazon's picking up the slack. Finally, I've got a move down at $100. So we've got another $13 to go there. So probably we'll be holding Amazon, Google, Apple, because they've got some wiggle room to run. Again, Amazon's probably the one that I'll have to, AMD's the one that I'm going to have to consider taking some profits on later today. I have introduced some other short-term stocks as well. I am looking at BA, which has a trade on right now, brand new trade there, and I've added Baidu. I was also looking at oil. Oil running through the trend algos is absolutely delightful. So I've been running a few tests, a few variations of the strategy, to see if we can get some extra profits from the markets. So again, oil is looking glorious. So 10 years of crude oil. There's a few extra hoops to jump through with a customized version of the strategy. So all we're looking at here is, do we have a steady equity curve for trading oil futures intraday, not swing trading? This is looking absolutely fabulous. So that's going to be a new addition to the trend family. I'll be rolling that out probably next month. Rules, etc., and specifics for the market to be confirmed. And obviously all my insiders will get that in the community area. What else have we been doing? Oh yeah, the DAX. I have been playing around with the DAX as well. For anyone who's on European time zone, we've got validation on the DAX. So if you want to trade the German index, you can do. It certainly looks fabulous. It's been a nice steady Eddie trader. So it can be included into the mixing pot should you choose to. So again, there's something for everyone as the family of strategies gets included. Or gets increased rather. Right, yo-yoing around on this market there. That cluster is just staying, that consolidation is just staying pretty firm, pretty firm. I don't think we're going to break today. I think as always, until something new happens, the same thing's probably going to continue. We're in a consolidation. So until it breaks, if it breaks, then that's going to continue to meander sideways. We're at the last day of the month, the last Friday of the month. We're probably going to see price just dither and ebb and flow backwards. So I'm not really expecting much today. It would take probably something crazy on the news front to break the mark or break this consolidation. And again, we're just not there yet. So it's probably going to be next Monday that we start to see continuation or breakout movements, either bullish or bearish for that matter. I'm leaning towards the bullish side of the equation for the reasons that are mentioned, but until it breaks through the high of that consolidation, and don't need to worry about it. All right, folks, so that's where we is at with the markets, with the opportunity, with the strategy. Buy the dips, sell the rallies, and look for consolidations if they are there, and basically just trade the shit out of the markets and make some money. And for a change, I seem to have finished my little soapbox talking a little bit early for a change. Well, that's a surprise. Let's open the phone lines. Has anyone got questions? Anyone comments? Do you want to share a viewpoint? If you've got some news that you want to share, got a question that you want asked or answered, or do you simply have a big takeaway that you want to share with everyone? You can type it in the chat box. If you'd like to hop on the Zoom phone line, then please feel free to just let me know that you want to have a little chat, and I'll allow the microphone permissions on. So folks, now is your time. And again, if you've got no further questions, got no comments, got nothing you want to add, we can obviously hang up our spurs for the session and call it a session. We've got 3 bearish trading opportunities that we've thrown to you. Short-term trend models is in motion. Awesome, Duncan, awesome. Oopsie daisy, press the wrong button there. So nice comment from Duncan. The difference between where's the trade and there's the trade. Yeah, that, I mean, I've got to admit, that was a huge eye-opener from my own trading. You know, my trading evolved very quickly when I stopped asking questions and started making statements. And it's a simple thing that you can apply. If you're ever asking the question, where's the trade? You've not defined what you're doing enough to place the trade. And as soon as you start making those statements, you will... Cheers, Barry. I'll keep that in mind. I just decided to have a change of scenery on my own charts. It's one of those things I've played around with over the years. Right then, it looks like that's it. So let's, I had this new slide. I was trying to think of something to call this, but this is what we're trying to do. I was trying to think about the Roadrunner being inflation and Wile E. Coyote being the Fed, trying to catch up with them all the time. But I couldn't think of something whimsical or witty enough. Anyway, let's dock the boats. There's only one thing that's always left for me to say, and that's to say thank you. We could all be doing other things with our time, our day. Could all be spend it with family, with loved ones. You could be doing something else ultimately. Just want to say thank you for deciding to spend it with me here today. It's very appreciated. It does help the day go by, just knowing that you are involved. So thank you. If you've got some value from today's session, the only thing that I can ask you to do is to share it with someone else. So if you've got the replay video, it's been live streamed on the YouTubes, then please feel free to share it with someone who needs to hear what we've spoken about today. If you would like to work more closely with me, you can do it by invitation. There's no hard-pressed pitch. We go through more the specifics of the entries, the exits, the stops, the targets, the how to choose the option stuff, the how to do big account trading, small account trading, futures, Forex, ETFs, whatever you want to trade. We've got something for everyone, as you've already gathered. The family of strategies continues to expand. As always, keep in mind that if you change nothing, if you're not getting results and you continue to do the same thing, nothing's going to change. And again, the shift for me was stopping asking the question and starting to make statements. There's the trade. And if you need help with that, you've got two choices. You can carry on flapping around as you are. That's fine with me. If you've got enough from what we've done here today, that can be just fine. But if you would like to plug in to a tried and tested system, I've spent quite literally thousands of dollars getting coded up in the last 2 years, spent the last 28 years developing the process that we've been through today to the nth degree so that you can press the easy button and just plug into a proven system that we know works, it gets results. And I know it does because people tell me it gets results. So that's the most important thing. So if you want to be a part of that, then let me know. We can have a long conversation about it to make sure that you feel it's the right thing for you. And if it's not, I'll always point you off in the right direction, depending on what you're looking for. And the bottom line is I want to get you results. I obviously get my results. And I only demonstrate this with the broker statement so that you can see that, hey, I practice what I'm preaching here. I'm not just saying it, I'm doing it. So with that said, let us meet. Let's do the Roadrunner. No splats at the end of the show here, but let's land the plane. It's game over time. I'll see you all at the same time next time. If you need to have a chat or you want a conversation, I'll be available. Just shoot me an email, reply to any of the emails that you get from me, and we can have a little bit of a chat. Or I'm in Slack. If you're in our little community, come and join me. Send me a message. But if I don't speak to you today, have a great weekend. Have a wonderful time, and may your future hold ice cream. I know mine will be shortly. That's it, folks. Have a great one. Enjoy your weekend, and I will speak to you at the same time next time.